along with Market Gauge Group's Michelle Schneider. And I'll start with you. Just today's action and what we've seen between Bullard's comments this morning, the FOMC. Have you changed your opinion on this market? Have you made any different moves?
No, I look at this market and I think, Charles, it's moving exactly the way we'd expect. I think the Fed, to the point that was made earlier, is doing its job. It's in this completely unprecedented moment in history. No one has seen shutdowns the likes of which we've seen. No one's seen the reopening snapback the likes of which we've seen. And I think the fact that the Fed is out there openly saying to the market, we're watching the data as it comes in, we will move as that data changes, I think in many ways that's reassuring to the market.
But Michelle, do you think, though, the message itself is inconsistent, that it's, between the dot plot, Bullard's comments now, and what we know Jerome Powell wants to achieve, is that adding to some uncertainty here?
Well, I think if you just look at what's happening in the market, the yields are going down, and the junk bonds, which is really what I call the Fed's folly, is holding up. So they're talking from both sides of their mouth. I think when push comes to shove, they're much more concerned about the slowdown of any kind of growth going forward than they are about inflation. And even though they mention the word inflation, and it certainly knocked down a lot of commodities, that's why we're seeing this roll into growth in tech, because that's really where I think the market wants to hang on to at this point, because they're assuming these yields are going to stay low.
I want to get back to you on that. I know you are eager to talk about that, and you've been spot on with some of your recent appearances, but let's talk about this script that everybody hears about. People watch financial media and they hear, okay, this is going to happen, so this should happen. And the big thing has been financials. They're supposed to go up, and everyone was told that for the last several months. The last few days they've been slammed. Is something different this time?
Well, I think with the financials, you've got a bit of a seesaw effect. On the one hand, with rates go up, you expect financials to do well because financial services profit margins can go up, where there's a greater spread that can be obtained. On the other hand, when rates go up and you're looking at an economic slowdown, on the other hand, there you're looking at a scenario where financial services may not make as much money. You'd expect for debt issuances to come down. You may expect to see more stress in consumer credit. So there are puts and takes on either side of this. I think the financials coming where they are. They've had an incredible run. I think a lot of upside have been priced in, and I think this correction is transitory.
All right. Stocks that are standing out. NVIDIA, it got an upgrade today. I think some firms sees it going to 900, but it was only a few weeks ago that everyone was talking this was a disaster. You turn around, it's up 46% in 3 months. Is this, Michelle, I kind of believe this is one of the names that you talked about a lot.
Yes, in fact, we did a segment with you on chip technology and what would we recommend buying. And at that point, we said NVIDIA is the quintessential chip stock. So now I think, again, at this point, it's very lofty. I don't know if I'd be a buyer here. If anything, if it closes under $750, I think those analysts who are expecting higher prices will have to be a little bit more patient. So there are other better opportunities than NVIDIA right here, as far as I can see.
Give us one now that we can let you brag about in 2 or 3 weeks.
All right, here's one, Netflix. We're long Netflix, so I always like to say what we have our money in, so it's genuine, and it's been basing out, gets through 505, 510. I don't see any reason why I can't get back up to 550, 560.
Just watching the tape, it acts fantastic. And I know you like some of these tech names as well. And while you're thinking about that also, let me just toss in DocuSign. Some of these reopening trades have come back to life. Where are you with respect to all of that?
Well, I think something like DocuSign goes beyond being a reopening trade. That's a fundamental shift in how people will work and a fundamental tool that's now going to enter their workspace. So I think DocuSign is about a more fundamental shift. One that I like, Charles, I own it personally, is Walmart. I am waiting for Walmart to do something transformational when it comes to content. Content, commerce, media, and consumer, all of those things have been coming together. I think Walmart's been ahead of the curve on some of its tech moves relative to other retailers. I'm very excited to see if they do something now with their balance sheet.
Hey, before I go, either of you buying the home builders? Lennar is the stock of the week. It acts phenomenal. And again, this is a group. Maybe it's lumber prices coming down. Anyone buying Lennar or some of the home builders? Not yet?
Well, I'm looking at ITB, which is the home construction ETF, and it actually made a new 60-plus day low. So if it can take out, say, that 68 level, that could actually give you a low-risk buy, because the home construction obviously is still very robust.
All right, and I cannot wait for this big content move from Walmart, and I'll be on the lookout for it. I love shopping at Walmart. Hey, ladies, thank you both very much. Really appreciate it on a very difficult day. We appreciate your expertise.